So is Nvidia stock about to bounce upwards, or are we about to witness a very steep sell-off? Now, of course, that is the $1,000,000 question that everyone is asking. And in this video, I want to go ahead and provide some notable data points in regards to Nvidia stock and kind of just my overall perspective of what we're currently seeing. Now, it's no doubt in question that Nvidia stock has gained a lot of popularity, especially for the year of 2024, as this has been a stock that has been running tremendously well up until now. Now, of course, for those within the Push and Profit private group, back in December 2023, we talked about this being a great breakout idea for both a swing trade and a long-term investment. And in fact, if we actually take a look at Nvidia from the beginning of the year to its highest point, it was close to over 172%. As far as, a gain for the year. And so, of course, you get a lot of eyeballs on something when it's done extremely well for the year. But up until now, we're seeing a lot of selling off. But this isn't just Nvidia stock in silo. In fact, we're seeing kind of this major sell-off take place within the broader markets. In fact, if we take a look at the S&P 500, we see a bit of this large sell-off. It's not a correction yet, but I mean, if it continues, it could very well enter into correction territory. But also, if you take a look at the NASDAQ Index ETF, the QQQs, which is a bit more tech-heavy, well, it's a bit more prominent, the sell-off that we're seeing. And so, of course, we're at a time frame where we're seeing memes like this surface all over the internet of people just kind of explaining how the market is very red. And of course, with Nvidia stock being a stock that's very popular, everyone's trying to wonder, well, is Nvidia stock about to crash? Or are we about to witness at least a little bit of bounce or some stability within this particular stock? And so, of course, I don't have a crystal ball, but I want to go ahead and provide some interesting facts. Now, one thing that's pretty interesting, and this is just a fun fact, by the way, is that recently Interactive Brokers, which is a brokerage company, released some data that suggests that Nvidia stock is now one of the most traded stocks within its platform, which actually outperformed Tesla, which used to be a very popular stock that many market participants traded. And so, of course, there's a lot of interest with Nvidia. In fact, I often like looking at alternative data, and one of the things that we see is that when you scrape the information from Wall Street bets, we're seeing that there's a lot more chatter coming into Nvidia stock, right? It looks like today, particularly on the 25th, there was a lot more mentions of Nvidia stock versus the past or the recent trading sessions. And so there's some interest that's kind of coming back up with Nvidia. And I believe that's particularly because, of course, this is one of the big names that was leading the markets. And it's actually kind of moving downwards with the market. So one can say that's leading the markets downwards. Now, we're going to go ahead and talk about Nvidia stock from a technical perspective, but also just highlight a couple of things we're seeing from a macroeconomic perspective as well. Now, one thing that I believe we're likely to see that's going to be a positive is, of course, the personal consumption expenditure report. Now, of course, I'm doing this video late night, but this information is going to come out Friday, July 26th at 8:30 a.m. and we're going to get the PCE, which for those that don't know, this is the preferred inflationary gauge from the Federal Reserve. And of course, if we see inflation continue on its path that it's been of this disinflation, well, that's good news for the markets. And so that could bolster the markets to kind of finally have a little bit of a pep in its step and finally start to, rebound, right? That's kind of one of the big drivers for this week. But what has been another driver for not just Nvidia stock, but just the broader markets as well, right? We're seeing the markets fall down. I said one of the drivers is going to be the PCE report, which I believe is going to be positive. But another driver has been earnings. We are in the midst of earnings season. And one of the things that we saw recently is that earnings haven't been very well. In fact, I want to go ahead and share this photo right over here. And when I say very well, I'm talking about the Magnificent Seven. For example, Tuesday, we had Tesla, which was a mixed bag of results, but ultimately it wasn't that positive, and the forward guidance was a bit iffy as well. And then Alphabet, which is essentially it's Google. Well, when you look at the Magnificent Seven, the earnings for them aren't doing extremely well for this week, and this was going to be a big driver. Now, of course, Nvidia stock is going to have its earnings kind of towards the later end of earnings season. They have their earnings on the 28th, and I believe that still fundamentally nothing has changed with Nvidia, that they're still going to be doing very well, and we're probably going to get another surprise with earnings, especially because right now we're still witnessing a lot of large corporations invest heavily in AI. Now, of course, the question is whether this AI will actually, pay itself over in the future. But nonetheless, while all these companies are investing into AI, one of the main beneficiaries is Nvidia stock. And so that's definitely some good news. Now, Nvidia stock, from a technical perspective, showed something that was a bit positive. And so what do I want to show? Well, if we kind of zoom in over here, we see this wick. And so what's interesting about this wick is that it's closing this gap over here. So it's kind of like a gap fill. So we tend to see stocks fill gaps, and then we could end up seeing kind of the reverse action take place, or we move upwards. But again, we also have this gap right around over here of $98. Now, I don't think that Nvidia stock is going to fall down to that level of $98 just yet. I think we still have a lot more to run. But of course, I don't have a crystal ball, and you should always just invest and trade in whatever you see value in. But what's interesting about this wick is that this kind of shows that there was some selling pressure taking place, but the buyers came in, they stepped up, and they said, no, we want to buy at these areas, and that pushed Nvidia stock kind of, and let's go ahead and look at it from a 5-minute time frame. We see that we had this steep sell-off, but ultimately around this area of $106.30, we saw the buyer step in and kind of reject the selling and saying, no, this is a great opportunity to buy in. And so now we're seeing Nvidia kind of in the after hours at $112.24. And so that's some good news from a technical perspective, especially, and whenever you see a wick like this, that's definitely a good sign that it shows that there may be a potential bounce. Now, of course, if we don't have, and again, the main driver, I believe, for this week is going to be, and of course, this is the end of the week, the PCE. If we have a good PCE number, we continue to see inflationary pressures weaken or soften, well, that's great. And we could start to see a little bit of a bounce within the markets. But if this does come in hotter than expected, well, then that would be a bad sign for Nvidia. But I don't think that's likely to take place. And I've talked about this within the Push and Profit private group for a while now. Every single time we had these inflationary reports, while the markets misinterpreted the data, we were looking at more higher frequency data. And we realized that inflation was falling down like a rock. Now, whenever I say that, it always triggers people. People say, oh, well, the prices at the grocery stores are still high. And I always like to kind of let people know that, well, when we talk about inflation coming down, we're talking about the trend of inflation. So the trend of inflation is slowing down. Inflation is still significantly higher than it was in the last few years. And that's why, of course, everything is more expensive. You go to the grocery store and you are buying significantly less items than you did before. It's should be it's an awful offense, right? It's just sad whenever you go grocery shopping. But nonetheless, we're talking about the trend of inflation. And lately, I've been telling those within the Push and Profit private group, which, by the way, if you're interested in joining the Push and Profit private group, it's the first link in the description below, where every single day the markets are open. I share my perspective on the market, as well as some trade ideas. And one of the recent trade ideas that I talked about was small caps. And I actually want to talk about that right now, because we're seeing a lot of selling taking place. And some people are saying this is a correction. I don't think it's necessarily a correction. We haven't hit that that territory just yet when we're looking at the S&P 500. And one of the things is that when there's a correction, there's very few places to hide or benefit from. And that's not necessarily the case, especially when you take a look at the IWM, which is the Russell 2000. We're seeing while the broader markets are falling down, the Russell 2000 is kind of holding itself upwards. In fact, if we actually take a look and we look at this chart from Bloomberg, we're seeing mega caps trailing small firms for the third week in a row. So we're seeing mega caps kind of slow down, and these small caps actually hold up pretty well. Now, that wouldn't be the case if there was just this market crash or this sell-off that a lot of individuals are trying to project and try to spew, right? That wouldn't be the case, especially as we know small caps are a bit more riskier. But one of the reasons why small caps are pushing up particularly is because, one, we're seeing evidence that inflation is coming down, and that kind of triggers the idea that the Feds are likely to cut interest rates, and that's going to be very well for a lot of these small cap companies. But also, we're seeing a lot of trimming from these larger, companies that benefited, like the Magnificent Seven, such as Nvidia, where we're seeing kind of, and by the way, I'm not saying that they're crashing, but we're seeing some profits being taken off the table and kind of rotating into those other, small cap companies, because we're kind of saying, well, we don't need so much concentration in these mega cap stocks. That's kind of what we needed when interest rates were just obliterating everyone in the economy. But now that we're getting closer to the idea of interest rates getting cut, well, we have to understand the market's very forward looking. And so that's why we're seeing IWM, the Russell 2000, the small caps, being a beneficiary of what's currently taking place with, of course, inflation slowing down. And I expect that inflation tomorrow in the report, which, by the way, you guys let me know if you guys are watching this video after 8:30 a.m., July 26th, how we're looking in terms of inflation. Of course, this is the Federal Reserve's preferred inflationary gauge. And so, again, if this comes in positive, this could at least provide, or take off some of the weakness that we're seeing in the market. So you combine the macro perspective with this technical perspective with Nvidia, and we very well may finally get a bit of a bounce, which could ultimately lead the markets to kind of pushing upwards a bit more. Now, I believe that the markets are going to continue pushing upwards towards the middle of August, but of course we have to understand that August is a very slow month with a lot of volatility. Why is that? Well, a lot of market participants, a lot of fund managers, especially in Europe, they go on holiday, right? We know the Europeans, they love to go on holiday during the summer, right? They go on a lot more holidays than us in America. But what happens is, well, when there's less activity in the market, the order books tend to have a little bit more a fluctuation going up and down. There's less activity, so there's more volatility. And we're also in the midst of an election year. And so that's going to contribute to a lot more volatility as well. And so we kind of had to get used to a lot of major swings taking place, at least until we get into November. And then, of course, that's where confirmation of where the markets or where things are heading is going to go moving forward. Because, of course, you have a lot of major companies like banks trying to gauge what's going to happen, whether it's going to be Trump winning, who may soften some of the regulatory issues that banks are facing under the current administration, or if we have Kamala. And again, by the way, guys, I hate to delve into politics, by the way, but it's something that we have to be mindful of, especially when a lot of these policies can influence a lot of major companies. And so, again, just trying to stay on tangent with Nvidia, we may very well see some momentum or a little bit of a bounce taking place. But at the end of the day, we have to get used to the volatility, especially as we are in the midst of an election year. And of course, we are in these summer months. But you guys let me know in the comment section down below, what are your thoughts on Nvidia? And if you guys found any value in today's video, make sure to subscribe if you haven't done so already. And check out this video right over here where I talk about what are the best trades or the best days to participate in the market. With that said, I'll see you guys on that next video. Take care, guys.